Welcome to the Oxen Group Nightly. My name is David Ristow. I'm the host of the Oxen Group Nightly, founder, president, and CEO of the Oxen Group. If you're not familiar with us, please check us out at www.theoxengroup.com. We're a financial analysis and investment opportunities firm. Let's get into today's Nightly. As always, we're going to talk about our market recap for today. We'll also be looking at our position that we got into and a recommendation today in applied materials. We'll also be looking at our position recommendation in Apple, some of the other positions we were holding. We'll also be talking briefly about our long-term rating update on Frontier Communications, who released earnings today, and then we'll also be discussing our forecast for tomorrow. So sit back and relax and enjoy today's Oxen Group Nightly. So the market today was another pretty awful day for the market as it slipped back, but in reality, we look at this pullback as a real healthy pullback and has created a really great buying opportunity for us. We've been able to get into a couple positions that that are a little bit lower. We haven't fully invested into as many positions as we think could be possible for this as a possible buying opportunity, simply because we're just nervous about, is the market going to go down for a third day? Can we rally back? Is there going to be some solutions in Libya? But overall, we see this as a healthy correction that will give us an opportunity to buy some stocks. And we'll talk about our forecast moving forward a little bit towards the end of the nightly. But today, continued tensions in Libya helped the market move lower. One of the main things that happened was you just saw that the fighting is getting a little bit worse there, and there's really no signs of that stopping. And what that really did was it created tension in the oil market for the second day. Oil hit $100 on the NYMEX today at one point before closing above 98, and there's been nearly 300 deaths and protests there in Libya. And this crisis is key because Libya is the 15th largest crude supplier in the world. They supply 2% of the entire world's crude supply. So the crisis could have some effect on that supply, as well as it makes us a little bit nervous about that spilling over into other markets. And so as crude prices rise, it's never very good for equities. However, there are ways to make money while crude is rising with various ETFs and some oil and gas equities. Also, the big part of the pull down today was Hewlett Packard. HP, as you may know them, had some weak earnings come out today, and they're really a bellwether in the tech industry. Although I, in my own personal opinion, would say that the company is behind the times and is no longer really a bellwether. I don't think they should be on the Dow 30 because I think most other tech companies that are in the consumer side of things, Apple and Dell, Research and Motion, are kind of ahead of this group, of this company. Hewlett Packard is basically is very dedicated and very influenced by how we're doing on computer sales, PC sales mostly, and then those sales have been weak as of late as more people have moved towards the tablet, nicer mobile phones, netbooks, and laptops. And HP really rules that kind of console PC market, and that market's dwindling. And they missed EPS expectations by 5 basis points, and then they also had to cut their forecast moving forward for the year from 133 billion to 131 billion. Both things were bad. Dropped the stock down about 9.5%. Really weighed on the Nasdaq the whole entire day. And they're trying to make a movement into cloud computing right now, which they believe is the future of the PC kind of industry. But that industry is not really profitable yet. So as they make that move, they're going to see less sales, less revenue. But hopefully over time that they'll be a leader in the cloud computing, they hope, and that will be able to allow them to be a leader once again. They hope cloud computing will sort of take over as the next thing after the tablet and the mobile market. So let's take a look at the chart on the day so you can get a little bit better feel of how we did and what we could be looking at moving forward. As we see, we started the day not too far down on the open. The futures are actually up and we were kind of bullish that we thought the market maybe would, have a nice little rally today, or at least stay kind of flat. And things started out pretty flat, trading around, nothing really happening. But as time went by, we had weak news from the companies, HP. We had issues in Libya. We had a couple other earnings that were not spectacular. And we started to lose some ground here. Dropped all the way down throughout the rest of the day to around the 12,100, all the way down to 12,080. But we saw a really good support here at this area and held 12,100 support, you can see, throughout the rest of the day. And I thought the rally into the end of the day and the support level that we kind of drew there was pretty strong. We saw on the SPY that it kind of touched a nice support line, and the DIA is kind of close to its own support line there. So both of those are bullish signs, and honestly, with some of the things that are happening tomorrow, we could see definitely a nice rally tomorrow. Today we entered a new position in Applied Materials. We recommended entry at 1551 as the stock made a nice pullback today, and looked pretty undervalued compared to what it could do going in through the rest of the day and into tomorrow. And the reason we really like this company is they're expecting EPS growth, a tremendous EPS growth from 0.13 to 0.33 year over year. And the company also got a really nice upgrade from Piper Jaffray this morning, from $12 target to $22 target, and that's a really significant upgrade. And basically, the analyst said, I was dead wrong about this company. They said the street estimates are too low, and the company has reorganized what is the real driver behind their profitability, and that's their connection to the solar industry. They provide, as we look at the chart, solar equipment to solar panel makers. So any kind of equipment they need for cutting semiconductors and any kind of equipment they need to put semiconductors together. A lot of that is supplied by Applied Materials. So the company has as supply and as the gigawatts of the solar industry continues to just grow and grow and grow, it might not be the best for the solar industry over time, but really for Applied Materials, they're at the front end of this really big solar boom that could be occurring. And so we see that the company could definitely make a nice move forward. One thing that we really like, we saw the stochastics coming to a bottom here, and you see the K and the D lines starting to come back together here. Also, the stock was getting narrowing Bollinger Bands, which means a breakout is coming. This stock should move up as Bollinger Bands contract. And we saw that the stock is getting a nice support here at the lower Bollinger Band. And they also have the EMA at 1588. And the stock from the 1551 went up to this area, got a lot of resistance there. But if the stock can get any support whatsoever tomorrow, we think it can definitely break through that level and move higher. And they should get a lot of support moving tomorrow. The upgrade was not priced in the stock at all as it moved down throughout the day after the upgrade. Basically just sold off. And the RSI, it has not dropped to this level since back here in December. So this is a really nice support area for this stock, and we think it should definitely bounce off these support lines here and move higher tomorrow with the exceptional earnings that are expected. We also ran a position in Apple, and we are really excited about this position. We were able to enter yesterday at the 341, or recommended entry at the 341 area, and the stock moved up today despite the market moving down and despite the Nasdaq being down. One of the big news breakers today, and one of the reasons we like the stock getting into it was, first of all, it has you can see a great support line here. It's just riding right on that support line, and it's going to break out. You can see the K and D lines are ready to just contract on the, crossover on the fast stochastics, which means the stock's going to definitely see a nice technical support. The RSI already bouncing off that 40 level, moving higher. And then you got the support line right here. Stock closed here. It's on the way back up. And then to help even more was the investor conference was today. And two things that happened were really good in my opinion. And I think the market's going to react well to it if it can get a little bit more support and the Nasdaq isn't so bearish tomorrow. The iPad 2, they announced that they will be revealing it and even maybe launching it in March. And there was speculation that it was going to get pushed back to June. So that's a really great news for them. And then also the company main investors nixed the CEO secession plan that was put forward as a kind of a class action. And so those two things I think are really good for the stock and should get some buying interest. And if the market just can even go flat, this stock's going to really fly up. And we're hoping that we can get it up to this area right here, and we can get some support even here and go higher. So we're very happy about this position. We extremely like where we got into this, and we think it's a great area to get in. I think even tomorrow, if you still haven't entered into Apple and the stock's not up too much on pre-market, I think it's still get into this one and ride a nice little rally back up to maybe the 355 area. Other current positions. We were stopped out of Macy's today for a 3% loss, despite really great earnings, despite very strong fundamentals from that company. Good forecasting of revenue for the year, and they're in that next spending kind of cycle. The company just did not get any support. The market just killed it again today, and we were stopped out for a 3% loss. And we're continuing to look to enter new positions tomorrow. As we said, we think this is a really good buying opportunity. We just want to make sure before we get into anything that the market can sustain some kind of growth. And the last stocks have dropped, 5, 6 to 8% across the board, and that kind of drop can represent a really nice buying opportunity, even if you miss the first initial 1 to 2% push. And then we are also open. We wanted to get in some short sales today, but I looked at the market this morning and we just thought, this thing looks like it could rally today. Didn't. Dropped really fast, and we were just never able to capitalize on any short sales. But we will be looking at those again tomorrow, in case the market has another round of news and earnings that are weak. Finally, before we close out today, we'd like to, with tomorrow's forecast, as we've kind of discussed already, we also did a long-term rating update on Frontier Communications today, and we had a buy rating on this stock, and we're holding it in our long-term portfolio, and that's a disclosure of a position that we're holding in our long-term portfolio. We dropped that from our buy rating to a hold rating today, and we're looking to actually exit this stock by after March 7th. Because we want to get the dividend on March 7th. But we dropped the price target from $16 to $10. And basically, we had given the stock a little bit too much residual growth capabilities. And we also thought that they would be able to better manage the Verizon acquisition. The company basically tripled itself last year when they acquired all of Verizon's landlines. And they have a really strong management team that we thought was going to be able to very easily handle this process, and they really haven't been able to, and they have had a lot of costs weighing on them. Their return on equity has gone from I think about 24% in 2009 to around 3% in the trailing 12 months. So it hasn't been a smooth transition, and we're afraid that the company actually is going to not be able to grow much more organically anymore. It's in a dying industry in the landline industry, and it just seems like that right now, the only thing that's really going well for this stock is they've got an 8% yield on their dividend. So it's a cheap stock and it's a hold. It's definitely not something that is going to go down a lot, but it's not going to go up a lot. And so it's maybe something that you want to put into your portfolio just for that dividend. But other than that, it's really not a great growth or value investment. So tomorrow, we've talked about this a little bit. Basically, I think the key for tomorrow is we just need a nice round of earnings, okay? We've got Priceline this afternoon. They had great earnings, great forecasting. They're looking strong about the economy. I think people are just forgetting. The last 2 days we've had the tension. We had a little bit of weak economic data. We had some bad earnings. But overall, we have to remember how far we've come and that this economy is rebounding tremendously. And Priceline kind of was the first, I think, company in a little while to basically say we're doing really well. And we've got General Motors tomorrow, and I think that's the key thing. If GM can come out and say we're profitable for the full year and we're looking to do well in 2011, we think this economy's got enough juice in it to really help us really improve everything. I think that could be a really big story for the American market and could really push us up a lot. Give us a good reason to buy. And we also got Kohl's and Target on 2 retail companies that could help out as well. And there's a number of economic data points coming out tomorrow. We've got jobless claims, we've got new home sales, we've got the durable good orders on the docket for tomorrow. So all those things also will be important. If those can come out better than expected or meet expectations, that will also help. And I think the market will be looking for a reason to rally tomorrow. A lot of stocks are bottoming, and I think there are definitely plenty of indicators that can come out that could lead to a rally. It's just a matter if they will actually be able to. Well, that's going to wrap us up for today. Please visit us at www.theoxengroup.com. Email us anytime. Call us at 1-800-709-1160, and we hope you'll be a part of our 70% plus accuracy. Thank you.